Hi guys, today we're going to go over the daily analysis for this wonderful Monday, August 27th, and we're going to talk about what pairs might be reverting to long-term trends and what pairs might be breaking out of trends. But before we do that, we need to talk about our terms, so let's do that quickly. Alright guys, these are our terms, and they're in place basically so that you can't sue us if we suggest an incorrect trade. Basically, the United States government does not want us to, make you think that we are giving investment advice. They want us to be clear that this is for educational purposes only, and that's what it is. So you can pause the video if you need to read those, but I'm going to go ahead and jump into the analysis now. Now again, what I talked about was thinking about what pairs might be headed back into their long-term trend and what pairs might be breaking out. So first of all, I have the euro dollar up here, and obviously the trend is down. However, lately it's been rallying to some extent. You can see that we have this base build up here. Let me get that thing there. Okay, where it's definitely headed up, and so it's difficult to take short entries when the recent trend is going up. Now, one thing that is a kind of fundamental rule of thumb in trading is that even though obviously the long-term trend is down, it's still not a resumption of the downtrend until the recent uptrend is broken. So until this level right here is broken, technically it hasn't resumed the downtrend. It's still in a uptrend. So it depends on how you look at it. But right now, I'm saying that the euro dollar, in the past month, is definitely in an uptrend. So what you would need to consider it a resumption of the downtrend would be a break of this level. Now, for me, I don't necessarily need to see that to take a short on the euro dollar. I don't need this level to be broken because I still consider the euro dollar very bearish overall. And I think that if you can get a short, say up here, headed downward, you'd probably be in better shape if it breaks this level than having to wait for a retest, a continuation, and all that. So to me, any signal at this point in time that signifies a good euro short is worthy of taking. And yesterday's bar, or I guess that would be Friday's bar, didn't really finish with a lot of strength. It kind of shied away at the end and resumed up. So we don't have a great bar there, and today's bar is kind of weak also. So I wouldn't really consider this a great short opportunity. However, it does appear to be rounding out towards the bottom here, so we could get a short signal anytime now. Now the pound dollar is actually a much better short signal. You can see if I pull this over here that we actually have a lot more momentum and a lot more authority headed in the downward direction on the pound than on the euro. However, we also have a more supportive level on the pound than the euro, because the pound over the past several months has been overall a lot stronger than the euro. So rather than having an obvious downtrend with the pound, we actually have a pretty sideways market. So because of that, this support level is a lot bigger deal than a small support level on the euro. So there's not a ton of room left to be made here. I would say that the probability of the pound coming down and hitting this level is pretty high now because of this rounding momentum. However, it's difficult to make a trade because there's not a lot of room between where your stop loss might be, if that's your entry, and where your target might be. So the best you're really going to get there is, say, a 1-to-1 entry, where we typically like to look for 1-to-3s if we can. So with that said, even though the probability of it coming down here, in my opinion, is pretty high, I think a better trade would either be to wait for a break of this level and try to target the bottom of the zone, or wait for a bounce and target it heading back up, depending on what price action does around this level. So that's my opinion on the pound dollar. Now the U.S. yen is an interesting pair and a rather boring one. As we've stated, it kind of struggled in here for a long time. There was no trade opportunities. It made a good breakout. I know a lot of people took this long and made some pips as it headed back up. Then there was this turn here, which was in the middle of some pretty good resistance levels, so that traded pretty technically and headed back down, and I'm sure a lot of you shorted that as well. But now we're kind of right back into this zone that it was at before. So once again, there's not really any good trade opportunities unless it either breaks out and continues or breaks down and continues. So unfortunately, I just don't see a lot of good trade opportunities until it gets out of that zone. So right now, I'm kind of just stagnant on the US yen. Now, I mentioned that some pairs are continuing their long-term trends, it appears, and some are breaking out. And AUD certainly appears to be breaking out of its recent trend. AUD has been in a very strong uptrend for a few months, and you can see that these three bars are signifying a very convincing breakout to the downside of the AUD dollar. So one thing we could do is draw a fib level to this recent, rally to the highest point there, and let me get that accurately. And we could target the first fib level if we think this breakout is for real. And so that might be a good trade opportunity. It does appear that the AUD is very bearish right now with a lot of momentum heading down. I mean, it traded very technically in that it attempted to break the level once, it retraced, and it broke it on the second try. And obviously, this kind of signal is very good for us. I draw this pattern all the time, which is like an M pattern, or this pattern, which is more like an upside down N pattern. But either way, what it's signifying is that price is struggling and then eventually breaking. And we like those signals because they seem less likely to be a fake out because we kind of already experienced the fake out. So here might have been what we'd say the fake out momentum break towards the downside. It hooked back and now it's continuing, and the second leg is a more likely run than the first one. So that's AUD dollar. Along with AUD dollar, because that includes the AUD, there's the EUROAUD. And the EUROAUD is an interesting little setup here because, excuse all my lines here, I had these on a smaller time frame and I was looking at all our levels. Let me get rid of those. So the EUROAUD is in a serious rounding. I mean, because of the ton of momentum headed downward recently, this rounding action, could have a lot more steam left in it. Like I said before, the price of the EUROAUD is used to being up near here more than down here. So it's not that unreasonable to think that the EUROAUD might continue up even more so. And you can see that although the euro slowed down, wasn't quite as strong over the past 2 days, it still is trying to make some ground upward each day. So, I'm looking at an opportunity to short this EUROAUD, obviously back down into that trend, but it doesn't look like we're getting a good signal at this point in time. And, it might be a long time before we do. So keep an eye on this EUROAUD. I know that some people got long down here and are still riding this up and gaining a lot of pips, and that's awesome. So, I'd continue holding on to that thing until it breaks a critical level back down towards the downtrend, because you never know. I mean, this thing could be targeting way up here, so keep that in mind. All right, let's look at a few more pairs here. The USDCAD is one we always like to look at. And the USDCAD, again, is another pair, kind of like the US yen, that's just being a little tricky. And the reason is that the US and the Canadian dollar are at similar strengths right now, in my opinion. You can see that, maybe over this past block of time, really no momentum or direction has been established in either way, because we've had a few bearish candles, a few bullish candles, a few bearish candles, a few bullish candles, and no candle really is just a big block. Like you don't see any candles like this one. They're just kind of half-tailed candles back and forth, just kind of fighting and not really making up any ground. So that makes the US dollar a little bit tricky to trade, or excuse me, the USDCAD a little bit tricky to trade right now. Just because we're not seeing a lot of great definite direction. We're not seeing like a break like this candle right here was a good tail. What we wanted to see was a retest and then just an absolute crash of the USDCAD. That would have been a great signal. But instead we got a few bars down and we just popped right back in, and now we're headed back down. And there's just nothing that's showing us a longer term momentum break that we might expect a rally like this one. So, we're not seeing that right now, and that makes trading the USDCAD tricky, and probably it's wise to stay away from the USDCAD if you're looking for multiple day momentum. There has been a lot of great signals in the USDCAD since this downtrend begun, but right now we're not seeing one. A great one was this one. It headed down here, made a few bar retracement like a hook, and then we had all these bars in a row, and that was a great signal. So if you caught this bearish bar on the continuation, you would have got 4 more bars in a row headed directly down, and those are great trades. But for this little section, I'm just not seeing that. So until we see something, whether it's a bounce up to here and then a strong break back down, a break out of the top of this level and a continuation up, break out of the bottom and a continuation down, whatever it is, we just need something more definite to base our trades off, because right now we're not getting a lot of sensible direction out of the USDCAD, and I'm just gonna be patient and wait on that. All right, let's look at the pound New Zealand as our last pair of the day. I always like to look at this one last because it's just an interesting pair to look at, and it's always fun to trade a pair that moves so many pips. Ironically, the pound New Zealand has actually been doing nothing over the past few weeks. It just doesn't do anything, which is very unfortunate. But what that means probably is that it's going to be ready for a breakout soon, where it does cover a lot of ground, like one of these runs could happen. And as I always like to point out, a run like this on the pound New Zealand is 1,700 pips, and not even that long a time. So the pip potential in the pound New Zealand is pretty incredible. But you got to wait for those signals. Right now, it is getting a few bounces off this trend line, but nothing that you can really take a quality setup on and run with, because it's just kind of sitting there. This is not good movement. So again, my encouragement, like the USDCAD, like the USD yen, is just hold on to the pound New Zealand, keep your eye on it, because a lot of the times these slow moving kind of boring pairs are the ones that provide us really great breakout opportunities, and you got to be ready to jump on those when they happen. So that's my advice on all those pairs that aren't doing much, and I would encourage you to stay patient with those. Okay. All right, guys. Well, thanks for tuning into the analysis. If you have any questions or thoughts, as always, leave those below, and I'll get back to you. Thanks again for watching, and I'll talk to you soon.